Looking at your announcement, it looks like pharmaceuticals once again sort of led the way for Johnson & Johnson. Give us your top-line analysis of second quarter earnings.
Yeah, so David, thanks for having me on today. It certainly is a pleasure to talk about our results, which I really think solidified the first half of the year in a strong way. Pharmaceuticals, as you noted, did lead the way. We continue to perform beyond the market in which we play. If you think about how we entered this year with somewhat average expectations for that particular unit, given some biosimilar and generic competition that we were facing, most companies with a $3 billion headwinds would be talking about contraction. We've had growth just based on our strong portfolio. We're able to bring new products to market as well as line extensions on existing products. And then we're seeing improving trends in our medical device and consumer units as well. So it was a very good start to the year.
We'll talk about biosimilars and generics a bit, because you particularly specialize in oncology pharmaceuticals. That seems to be getting to be a crowded area right now. By looking out, do you see the margins coming down in those areas?
Well, you know, David, when we look at our performance in pharmaceuticals, it's really the result of transformational new medicines that are differentiated from the current standard of care. Last year, we had about 8% growth in our pharmaceutical unit. That was in the face of price declines of about 6%. We're seeing that same 6% price decline this year in our portfolio. So as long as you're bringing new innovation that is differentiated from the standard of care, meeting new unmet medical needs, I think you have a path to success.
What about acquisitions and dispositions? Because you have made some moves there to sort of get rid of some parts of the business and also move into others. As you look out strategically, where are you looking to buy, where are you looking to sell?
Yep. So, you know, it's part of the management's responsibility to continuously evaluate our portfolio right through the executive committee, the board of directors, making sure that we are optimizing what our core strengths are, where we have rights to win, and creating value for shareholders when we find opportunities that aren't doing as well as they should. So we continually are on the lookout for new supplements to our business. If you look at our growth over the past decade, about 50% of it has come inorganically. At the same time, we look to prune to grow, if you will. So we've divested some businesses recently that are, quite frankly, in the hands of others, can be extracted for more value. And in turn, we take that the value that we would gain and put that towards new opportunities for us.
Joe, how are you doing with Washington, to put it very directly? I mean, there's a lot of talk in Washington about drug prices, a lot of different proposals from the administration, from Congress. There are hearings going on and things like that. Do you regard those as something that might actually change the nature of your business going out?
Yeah, so, you know, we applaud the administration and legislators' efforts to bring down costs for people related to pharmaceuticals. We're very big into transparency, so having a fact-based dialogue is something that's very important. We led the industry with our transparency report 3 years ago. You may have taken notice of that we were the only pharmaceutical company to kind of buck a trend and actually have not just list price, but what the copay would be for patients. We think there are avenues to bring down costs for patients. We were a little bit disappointed that the rebate rule was put aside last week. If you think about just the dynamics of drug spending, 42% of every drug dollar that's spent goes towards intermediaries. Now, they play a valuable service, but I think the value equation is a little bit distorted when you look at that. And then you think about the discounts that are given to the intermediaries. It's $300 billion currently, up about twice the amount it was 5 years ago, and yet patients are going to their pharmacy on a monthly basis paying 5-6 times what they used to pay.
Joe, you're the chief financial officer, not the general counsel, but law figures in right now to Johnson & Johnson a bit. Talk for a moment about the talc litigation, and specifically there's investigations from the government. Are you reserving for the possibility of real liability having to do with asbestos allegedly being in talc?
Yeah, so David, you know, well, we're going to validate what a number of agencies, in addition to Johnson & Johnson, has known for decades, that the product is safe. Beyond that, unfortunately, it's big business for plaintiffs' attorneys to target companies seeking large settlements for companies that are successful and value their reputation. We've reserved a small amount related to litigation costs in that defense, but nothing related to liability or settlement payments. If you look at any of the judgments that have gone against us originally, most of those have been reversed on appeal.
But there were reports, of course, there was a grand jury now. The Department of Justice, you earlier said Department of Justice was investigating, but it appears to be a grand jury. Does that affected your judgment about what you need to reserve?
Not at all, David. Again, we know that the Department of Justice is an astute organization. When they look at the facts in a very thorough way, we trust they're going to come to the same conclusion that, that we have, and that's that the company acted responsibly and that the product is safe.